Well, hi folks, quick update on the euro. The euro inflation rate came out just about an hour ago, and you can see it's just ticked up to 7% after a nice downward trend over several months since October 2022. Last month was 6.9, much lower than the previous months, but today we saw the number just tick up by 0.1% up to 7. That might encourage the European Central Bank to start raising rates if they see this number begin to tick upwards again, but I'm not too sure they can do considering the state of the economy in the European zone. Let's have a look at how this translates to the euro chart. This is the 4-hour chart of the euro against the US dollar, and what's notable about this is that we've actually broken down through this fairly long-term trend line going back to the middle of February this year, and you can see it's been a really consistent trend line up until today, and in fact yesterday when we broke through it but rallied back up again through it, just touched the 50-period moving average, and then we've now fallen down since we saw that inflation number. We know that we're probably going to get 25 basis points from the Fed tomorrow, and we know that the Australians have just increased their interest rates by 25 basis points. So all in all, a rather mixed picture, and one was not too sure about how the euro would react to this, but as it turns out, the euro has broken down through that trend line and also fallen down through this horizontal support line, and crucially was rejected at the big round number 1.1. So I think we're going to see the euro continue to move down. The first target will be 1.0875, which is a 38% retracement of this move up and a previous support and consolidation zone. And then we have potential to move down to the 61.8% Fibonacci retracement level, which is at about 1.0740. You can see if I draw a horizontal line there as well and overlay it on top of that Fibonacci number, it's also a previous resistance level, an area of supply and demand and resistance over here and support over here. So that's a pretty important number, 1.0740, and we expect to see further euro weakness moving down into that area. We must hold beneath this trend line. That's really important now that we've formed that wick high on the 4-hour chart and we've broken down through the support level below it. If I switch across to the day chart, there's the same trend line, and perhaps it's easier to see it on the day chart. You can see we've got some support right below us at 1.0913, and if I just move this line up to that area, you can see that's also going to be a stumbling block for further moves down. It's a previous support level there, previous resistance on several occasions in this area, and previous resistance over there. So that's the first obstacle to a move further down. As we head down to 1.087, 1.08, the big round number, and then 1.0740, where that 61.8% Fibonacci level is, and this previous support and resistance level. That's what we're hoping for. We're short on the euro, we're short on the pound, and we're short on the Australian dollar, looking for a move down on all of those pairs against the US dollar. And if we have a look at the dollar index, you can see that we're just rallying up. We've made a new high, and we're making consecutive higher highs and higher lows. We're approaching this downward trend line on the dollar index. We really need to hold where we are now, break up above that trend line on the dollar index, above this high here at 102.80, and then up towards this red resistance line and these moving averages. You can see that this red resistance line is pretty crucial, being previous support there, and actually the kind of dividing line between the bullish and the bearish scenario for the dollar right now. So we need to break through that trend line up above this red line, and then we could see the dollar index moving up into the 105.5 and then maybe the 107 to 108 region in time to come. Remember, we've got the Fed interest rate hike announcement tomorrow, and we've got Jerome Powell's statement or speech half an hour later, and that's going to have a big impact on the market. We'll find out first of all whether they are going to increase rates, which of course will be dollar positive, but then also in his statement thereafter, we'll find out what the outlook is for the FOMC going forward, and whether he's going to talk about pausing rates or simply waiting for the data to come in to decide what to do, whether he's dovish or hawkish overall in his tone, in his grandfatherly sort of way. But I don't expect that we'll hear any talk of pivoting and reducing rates going forward, despite the various problems that we've seen in the banking sector over the last couple of months. So that's our overall strategy. Short euro, short pound, short Australian dollar. You've seen the charts. That's the way it looks so far, looking pretty good. And at the same time, we're also short the euro against the Japanese yen, and that's a topic for a whole different discussion. Take care, have a fantastic trading day, and I'll speak to you soon.